and welcome to today's special webinar event. I'm Terry Ryder, founder of hotspotting.com.au, and today's webinar is special because we're taking a slightly different approach to our normal format for webinars. We're going to make this a forum for you to have your most urgent questions about real estate answered. And I think it's very timely because we're in the middle of a market situation that we haven't seen for perhaps 20 years in Australia, where markets right across the country are not just busy, in many cases they are, as I said earlier, frenetic. That applies not only to properties for sale, but also properties for rental. Now, there are very few real estate professionals in Australia a better place to understand that and to be able to make sense of it than my special guest today, Kate Hill, legendary buyer's agent from Adviseable. And Kate and her team provide their service right across the length and breadth of Australia, and they're in touch with all the major markets, whether they be city or regional. So this is an opportunity for you to ask your most burning questions to Kate or myself. And you can do that by typing your questions into the chat box or the Q&A panel that you should see in front of you. Or if you'd like to ask your question live and have a chat with us, you can put your hand up by clicking the hand symbol, and we can unmute you and have a discussion. Okay, so Kate, welcome.
Hello everyone out there. It's very nice to be back with you. I always enjoy it, and I love it, especially when you use the word legendary. Can't deny it. Yeah, there's so many things to discuss, so much happening. Very different climate to this time last year in every sense of the word, ish, if I can put it like that.
Yeah, well, I mean, we very seldom have a situation where it's just the same set of circumstances right across the country.
Absolutely. And that is in our little intro chat together when I said, that there are very similar questions that I'm getting. That's one of those answers that I'm giving everyone. It's very rare that we have these very similar conditions in many, many areas across Australia. Yes.
Yep. I mean, in my experience, I've been doing this for a frighteningly large number of years, almost 40. And in that time, I've only seen two genuine national property booms, the late 80s and the early part of this century. So it's the last one was about 20 years ago almost. But I think we now have one now. And I suppose the question that we could start off with is why? What do you think?
Why are things booming? Can I be horribly boring and just read my disclaimer out to everyone? Because I know it's not very exciting, but I do. And while we are taking questions from lovely people out there, I do need to advise everyone, information shared is general in nature. Nothing that we say here constitutes personal financial advice. You do need to talk to all your professionals about your particular situation, or engage with us, and we will do that as well. So, okay, having got that out of the way, I think really, where do we start? Why is it booming? Pent-up demand, right? People put their lives on hold, some still are, for a good year. And in a way, even if you think before then, it's been one thing after another. Federal election that put everyone off. I know that's it's old news, but I remember it very well because a lot of people were on hold there as well because of that threat from Labor of removing negative gearing policies. We then had APRA who were curbing the amount of lending that was going on because of the Sydney boom. We've had bushfires, we've had floods, and obviously lately we've had the pandemic. So it's been the pent-up demand. People are desperate to do this. So while they've been on hold, and in the meantime, obviously, Australia has done, when you compare it with the rest of the world, an awesome job at keeping this pandemic under control. We're living our lives within relative normality, or a new normal, if you like. People have saved money. No one's been anywhere or done anything, at least I haven't. We've all been paying down loans. We've been saving money. Deposits have been saved. People are seeing property as a very stable asset class, you know, much more than the share market. When you look at that share market drop back in March, that doesn't happen to property overnight the way that happened when you look at those tables. And that can be quite a scary thing for people, right? And property was expected to do the same thing by a lot of people. You know, we had all those things in the news, property is going to drop 30, 40, 50%. It didn't, it hasn't. And I think there's just a real sense now, particularly after Christmas, we've got that over with, of sort of, it's psychologically of freedom that it hasn't happened, that doom and gloom with property. I think also, and not to be underestimated really, is during the pandemic that I think a lot of people, they started questioning, you know, oh, what's my life all about? You know, what are my priorities? Am I happy in my job, my life, my house? You know, so that and the ability to work from home, it's really driven an interest in more affordable and better lifestyles. People are looking for more of a work-life balance. I think all of those factors and more, Terry, add to them, are contributing to this surge in, you know, people are like, right, civilization's not ending, let's do it. That's in a crude way, that's how I put it. Yeah. This real reassurance that it's going to be okay long term. Yeah.
Like, I think one of the points you've made is that there are multiple reasons why things are happening, and sometimes they're local reasons. But I mean, I've got in front of me my list was of I think 11 or 12 different items, and you've just suggested 3 or 4 that I didn't have on my list. And it just shows you, media keeps giving us this really simplistic. It's all about the low level of interest rates, and of course, nothing's ever that simple. And
no, it's a factor. Of course, it's making it, you know, available. It's making property available for people, but that's not the driving force. No, absolutely not. Sorry, go on.
Yeah, so you know, the reasons are complex and many and varied. People need to keep that in mind. But I guess in the final analysis, the point is there are lots of reasons why we do have this momentum building towards what we think is going to be a national property boom. In fact, I think we already have one. It's already here, and it's going to have some longevity. We've got lots of questions coming in already, which is great because that's the point of today's session, and we had some even before the event. So let's start with a question from Gemma. And she asked, do you believe the Perth market is at the right time for investment? That's the first part of a question. So perhaps you could speak to that.
Part one, do I ever? Yes, I do. I have to again say, look, do you believe it's, so is it at the right, what was the question? So is it at the right stage for investment now? Yes, I do. But it's not for everyone, right? You always need to consider your personal circumstances, right? But just as a very general outline, Terry, in your most amazing recent Perth report, I did a video on the Perth market recently too. So shameless plug to my YouTube channel, everyone, go and watch the Perth video. You noted 60 rising suburbs in terms of sales volume in the Perth metro area. We have got vacancy rates at record lows. I think it's at 0.9% at the moment. At the same time, you've got lending figures that are revealing a significant drop in loans to investors for property in Perth and WA as a whole, right? It's a real key factor in the low supply of rental properties at the moment and why there's a short supply. Again, I'm not surprised. They shut us all out. You know, you can't have it both ways. I'm not saying that was a bad thing. I'm just saying that that's fact. That's what they did. But people do like to go and look at what they're buying. And, you know, when they shut off the rest of the country, they send out that signal, Perth is not open for business. So you've currently got 53%, I think it was, fewer properties listed for rent right now than at the same time last year. And that's led to an increase of, I think, about $25 a week to that medium rent in the last 12 months. That's a lot in a year for that, you know, that market. Similarly, in terms of future prospects, you look at the number of infrastructure projects, massive infrastructure projects that the WA government is pushing ahead with, and that's not insignificant, right? You look at the Perth economy, WA's gross state product was higher in the past financial year than any other state. Those are some really basic fundamentals that we look at that haven't, that you know, those conditions haven't been in there like that for many years. Yeah. That doesn't mean the market isn't without its risks. Sorry.
No. Yes. Perth's overdue. I mean, it's been a long time for Perth.
We've been talking
but yes, I think the time is right to get into Perth. But be mindful. I always think that Perth market is a little bit more volatile than most capital cities because it's strongly linked to the resources sector, and that needs to be kept in mind.
Definitely.
Yeah. The second part of Gemma's question is, where in Perth do you believe Rockingham, for example, would be a good option?
Yeah, I do. I think all of the areas that are sorry, again, I've got 6 things going through my head at the same time. Not unusual. Areas where a lot of that are affordable, but I'm going to say this across the board really, but those affordable first homeowners areas are doing really, really well. That would be your northern suburbs, inner north, like Stirling, LGA. I love it there. It's really quite central when you look at it on the map. Lots of infrastructure, education, all those things that we look for when we do our area research. So the Stirling LGA, the Wanneroo, Joondalup a little bit further up, a little bit more expensive, but those belts there. And then in the south, you've got Gosnells, Armidale, you've got Kwinana sort of more on that more coastal side, sort of further west to Armidale, Gosnells, and then Rockingham a bit further down there. So all those areas are very affordable. Kwinana's not everyone's cup of tea. It's lovely, don't get me wrong. But there are certain risks attached to that market too. So those are the markets that are moving at the moment, that are, you can sense it, they're keen to move, but there isn't. And again, this is one of those issues that I think most property buyers are facing at the moment, that there just isn't enough quality stock yet. I think it's coming, but it's not there yet. So
it's one of the factors. I think that's one of my list of factors why we're having prices going up as strongly as they are. Yeah. We've got plenty of demand, but listings are still very low. Yeah. Like I think the first home buyer cohort has probably been more prominent in Perth than anywhere else in Australia lately. And Rockingham's an obvious target because it's very affordable, and it's sort of a lot of those suburbs are on the bay. So I mean, it's
exactly, that's right. And but the other thing to consider at the moment is, you know, where that demand is, where are people looking to buy, and I think while I would be cautious about going, and I don't necessarily mean Rockingham because it's got you know, its suburbs are rising in terms of sales volumes, is that you just don't want to go too far out with Perth. And I'd say the same with Adelaide. You know, stick to the metro area. Where it's less, it is still volatile overall, but it will be less volatile than those more regional areas. And obviously, you know, there's poor people out in those eastern suburbs, and then the hills where those bushfires are at the moment, you know, that's kind of lapping on the edges of Ellenbrook there, which is a new development, which is unexpected.
Final part of Gemma's question, do you believe that regional towns like as examples, Bendigo, Ballarat and Victoria, or Rockhampton and Queensland would be better investment options?
Better than Perth?
That's what she's asking.
Let's assume she means better than Perth. Sorry, Gemma. Yeah. Look, again, I think that depends on your risk profile. And I don't mean that to be vague, but you really need to be aware that there is always that risk of the resource sector. It is a big mining town at the end of the day. It is, we like it or not. So there can be high vacancies. There can everywhere, you know, when there's an oversupply of property, of course, but you really need to be mindful of where you go there. So while I don't think it will necessarily be better in either or, the cycle will be different. When you know, Perth is a completely different animal to Ballarat and Bendigo. They're different animals, little different animals to each other, but they're quite different animals to to Perth. And in terms of longer term volatility, I would probably put Ballarat and Bendigo over Perth. And what was the other one? Rockhampton, because that's given us quite the wild roller coaster ride in recent years too. Yeah.
and I would say that a lot of people ask questions like this and think there's a right or a wrong answer. The right answer could be different for different individuals.
And I'm really sorry. And it's not intended to be vague, but it's true. This is, what we do is not cookie cutter. It's and I'm going to keep on at this. It's what's right for Gemma might not be right for me, or the clients that I'm dealing with at the moment.
And it may depend on what she already owns, and it might be okay. You already own real estate in regional Victoria, so look elsewhere for diversity. Yeah. AJ's question, I've used the word frenetic in my introduction, and AJ's asking, do you believe this frenetic market is just irrational exuberance given the state of the economy?
Mm-hmm.
Well, I mean, I could speak to that. I mean, I certainly don't think it is. I think
you were Mr. Frenetic at the start. You go for it.
My list of reasons, as I said earlier, why we have such strong property markets is very long. It's not just, AJ, it's not just exuberance about the state of the economy. The state of the economy, which is stronger than we were told to expect, is one factor, and unemployment is much lower than we're told to expect. But there's many factors feeding into this. I've got a list here of 11 or 12, and as I said, Kate has suggested 3 or 4 other factors that I didn't have on my list. So it's complex, and I think it's got longevity.
And look, and I don't think it's going to be frenetic everywhere for the same amount of time, right? No. They're all, so while we do have these very similar, I guess, buying conditions and certain things happening that are happening uniformly across many of our property markets, the way and the reasons of those things are sort of the same, but I don't think the longevity of some will be the same as the others, so again, which I'm sure we'll cover off as we talk more about areas, because some of those areas, they were already trying to boom and grow and had awesome growth drivers last January and February before COVID put a stop, or a hold. We pressed the pause button on everything. They were already on the move. So
I mean, one of the most powerful trends is the one we call the exodus to affordable lifestyle, and I think that's got great longevity. It's been portrayed by media as a response to COVID, but it's not. It's been underway for years. Sydney's been losing population to people moving to other parts of Australia for 10 years. Melbourne quite strongly for the past 3 or 4 years. So it's about technology and the ability for people to work remotely. That's been, in simple terms, the fundamental driver.
Yes, and really COVID just accelerated that, that trend. It kind of put people into action, but it was already happening. Yeah.
So I think people are going to continue to do this, and it's going to be a long-term trend. So that's one of the drivers that we're seeing. And so I don't think it's a short-term or irrational one, AJ. I think it's something with longevity. Now, just looking at it from another perspective, because what you and I are experiencing, Kate, is that some very, very strong markets in most parts of Australia, but not everywhere, as we keep pointing out. And some of the exceptions are the inner city areas of the bigger cities. Deb's question is, during this pandemic, it's very hard to get a tenant in central Sydney, possibly get positive cash flow this season. What area should we concentrate on? Well, I think Deb is sort of perhaps focusing on one of the exception areas. In most parts of Australia, vacancies are ultra low, below 1% in many cases.
Yes.
Central Sydney is an exception.
It is, as is central Melbourne, right? So, sorry, does she has an apartment that we're trying to get tenants for, or we're looking to buy?
She doesn't specify, but you could perhaps assume that's the case. I'm finding it very hard to get a tenant.
You need an awesome property manager. And I would absolutely refer you to your webinar, Terry, from 2 weeks ago, where you had a property manager on who is exceptional. And I think she gave, I was listening, I just thought it was so good. And she gave some really good examples of those kind of properties that she is actually tenanting at the moment in those areas. So you need an exceptional property manager, and you need to, there's absolutely no tactful way to say this, and I'm really sorry, but you just absolutely need to be okay with the rent that is being suggested. You need to get a tenant in, you need to drop, if you need to drop your rent, you're going to have to drop your rent. You know, there was that story of her, a client that she had who was absolutely dead set on a certain amount of weekly rent, and it was vacant for months, I think. So it's better to get people in. It affects your insurance. You know, you can have strata issues. There's all sorts of stuff that you have an issue with if your property is vacant for extended periods of time. So it's always better, I think, to have that property, drop your rent to where you need to be at to get somebody in, so that you have your property occupied. And you're not hemorrhaging money. So, but awesome property manager who will have that strategy and who can put that plan together with you to get it tenanted if you are in that situation.
Yeah.
So, but look, that will turn around. It's, you know, it's a short to medium term thing.
The vacancy rates are actually coming down. They're still way too high, but they are lower than they were, say, the middle of last year.
Yeah, horrendous. It's here in central Sydney, and also, you know, in those inner Melbourne, New Docklands kind of areas, they were up in the 15 and 17%. So,
but also pointing out that you know, those are very much the exceptions. In most parts of Australia, the opposite situation.
And there's very obvious reasons for that. You know, there's no tourists, there's no migrants. We've got, you know, fewer hospitality workers, obviously, because we were all in lockdown for such a long time. Melbourne in particular. So all those industries that typically rent in those areas, students, there's no international students, you know, the list goes on. And because of the lack of international arrivals, you've got all the Airbnb properties flooding the market as well, looking for long-term tenants. So you've got this massive oversupply and very small demand, obviously. So, but yeah, that will, as you say, they are coming down. I think it'll take a while to recover. But
to get a detailed answer to your question, how to deal with that situation, as Kate said, refer you to the webinar that I did with Joan Tully, a very fine property manager, 2 weeks ago. You can find it on the hotspotting.com.au website. Another question, switching attention to southeast Queensland. The question asked, is the Coomera, Pimpama, Ormo area, that's the growth corridor between the Gold Coast and Brisbane, the fastest growing area in Australia? What's your view on investing in that area? And it's a good question, because it does raise some issues about people being attracted to areas because they have very high population growth, and perhaps not considering some of the flip side of those issues.
No, I continue to be interested in why, I'm not saying it's a bad area, but why this constant interest in the Gold Coast? Why? I'm like, why? I know it's partly the media too, but people are very drawn to that area. I can't quite put my finger on why particularly there and not somewhere like Marion in Adelaide, which is exceptional when you look at everything. Why is this focus on the Gold Coast? Why is it all?
I think a lot of it's people who don't do research but just absorb media sound bites and equate that to research. They're attracted to the glitz and glamour. I mean, we still have masses of people buying apartments in Surfers Paradise every year. Notwithstanding the fact that the median price for a Surfers Paradise apartment today is lower than it was 10 years ago, which says something about that market.
So can we just say stop it right now? Stop it. Now, okay, Pimpama, Ormo, they are different animals, okay, in fairness. Gold Coast, please think really, really carefully about what you're doing there. But Pimpama, Ormo, Coomera, you know, you've got, as I always like to say, you've got normal people living there as opposed to Surfers Paradise. It's more your family area. Like I say, where normal people live, but it is still the Gold Coast. It is still an area that is very highly dependent on one industry, and I don't like that. I never have. Why would you risk that? You know, there's not enough diversity there in times like now, like we've had in the past 12 years, 12 months, pandemic, you know, where obviously tourism has been an industry, one of the most affected industries. So when you're doing that research, you know, check the diversity of industry, of what is happening in that area, so that there are enough industries where everyone can work if one of them falls over. So if there are no tourists coming into Australia and very few from interstate, because none of us are allowed into Queensland for whatever reason, what's happening in the Gold Coast other than tourism? Is there enough in terms of diversity? What is going to drive that property growth when you compare it with the Sunshine Coast? And I know I talk about it ad infinitum, but there's a very good reason for that, because they are chalk and cheese in terms of potential. Look at the Sunshine Coast, not the Gold Coast.
And just to specifically answer the question, is it the fastest growing area in Australia? Well, it's certainly one of the fastest in terms of population, but that's because land is available for the development of new estates. And yes, don't be seduced by that necessarily. There are other things going on. There's some major infrastructure. That's where they're building the Coomera connector, the alternative M1.
Yep.
There's the Westfield town centre happening there. There is some major infrastructure coming into that area.
But that's but it's like, you know, when you're looking, but they're absolutely servicing the growth in population, but you still need to look at those fundamentals, like I said, of diversity of industry, of where is everyone working, what industry is everyone working in. So, and you often see this, you know, it's the fastest growing area in Australia, it's the this in Australia, and that's because they're building 10,000 new houses. But how does everyone get to work? What do they work in? What are the amenities? What other infrastructure is coming? All that stuff is, you've got to consider all of that. So, right. Yeah.
A question from Craig, and I guess this is, I get a lot of questions right now, but people, should I sell or should I hold? And this is from Craig. I have a duplex in Torquay. That's, hang on. No, I initially thought he was talking Surf Coast, Victoria, but actually, no, I think he's talking Hervey Bay in Queensland. It also has a suburb called Torquay. What are your thoughts on the property market in Hervey Bay?
I don't know it, I'll be honest. Don't know much about the Hervey Bay market. I tend to, I operate in typically our larger urban centres, sort of middle, out the ring, your Ballarat, Bendigo, Geelong, and you're in a big regional cities. I tend not to do these lifestyle locations like Hervey Bay or that sort of stuff. It's not my area of expertise.
I do know it pretty well.
Go Terry.
Look, Hervey Bay is a great example of, you know, exits to affordable lifestyle, very affordable. It's often referred to as sea change for battlers. It hasn't shown very much growth in the last 10 years. Developers piled and oversupplied it for a period, and it just doesn't have the growth drivers. I refer to what Kate said earlier about, you know, a lack of diversity of industry. It is now starting to show some growth, and I think it's because it's getting a bit of the wave of people moving to affordable areas for lifestyle reasons. If you've owned, I would suggest if you've owned a duplex in Torquay for a while and you haven't had any growth and you think getting rid of it, probably would be a shame to sell just as it's starting to show some growth, because there's no doubt that there's an uplift in sales activity. There's the evidence of prices rising at last. So it might be just hold it for a while longer and see what happens.
I think
it would be heartbreaking if you've owned it for 10 years and you sell just before there's some growth occurs.
And I'd be saying that quite a lot actually at the moment because we're in these, you know, unprecedented and unusual circumstances that there is an element of let's just watch and wait let's give it 6 months, just see what's trending. That in some of these markets, because we just don't know how they will or won't.
And Timothy also referring to Queensland, a pertinent question that I think is probably on the minds of lots of people. He's saying Sunshine Coast has risen a lot in the past 6 months. I'd say a little bit longer than that. Do you think it's still a good time to get into that market? To what extent do you think it will further rise? Yeah, definitely one of the most compelling growth markets in Australia. The question is about timing.
Look, I think it has a long way to go, just because of the level of activity. The council are very proactive. The hospital development, it's phenomenal. And also, I think it has one thing that many regional areas don't, or more regional areas don't, and that is that the job opportunities, again, in very diverse areas. So it attracts people from Melbourne, from Sydney, as much of Southeast Queensland does. For that very reason, you've got, I think that when you think about why people move, they're looking at obviously a lifestyle change for whatever reason. They're looking at property prices. They're looking at income. How am I going to provide for myself or my family? And improved lifestyle opportunities, right? So, and the Sunshine Coast offers all of those things. That isn't a fad. So when the Sunshine Coast Council decided all those years ago to diversify itself and what people did for a living up there, which the Gold Coast has not yet, they did a great thing, with the hospital, the police training college, the university. They're developing new town centres. There's new roads. There's so much going on there, and you've got some of the most awesome beaches in Australia that they're about a 20-minute drive away. So you've got tick, tick, tick. I don't see that ending anytime soon. There will be a consistent demand there because people have everything that they want there, and they can afford a decent place to live for themselves, the family. They've got work, and it's beautiful.
Yeah. Like, I think the best time to buy there was a couple of years ago, but as you say, I think it's got longevity, the upcycle. It's a long-term buy, the Sunshine Coast. I think it'd be a great place to own real estate long-term. Justin's asking, and here's one for you, Kate, because I know you can really speak to this one. What do you guys think about Western Sydney, for example, the Penrith area?
Where do we start? What do I think of it?
Yeah, I mean, I know you've been puddling around out there on behalf of clients recently and finding it pretty busy.
42-degree heat. Yes, I have. I think it's one of the most compelling areas in Australia to buy right now. Very generalized comment. It's not cookie cutter. I keep coming back to that, right? It's not everyone's cup of tea, because it's going to depend on the age of property that you are comfortable with. It's going to depend on the cash flow that you're comfortable with. But that market has capital growth potential that is hard to beat out there at the moment. But I'd say that about many of those areas that surround new airport construction.
Yeah. I ended up in a radio interview with ABC Sydney, the breakfast program with Wendy Harmer yesterday morning, and they wanted to talk about Mount Druitt because I'd mentioned it in one of my reports.
Oh yeah.
And I was explaining, what's happening out in Western Sydney, and Mount Druitt's an example because the state government's announced they're going to be doing rezonings and injecting a lot of money into the CBD. The hospital's having a massive refurb. It's proximate to that very influential new airport in the Aerotropolis that's going to spring up around it. So yeah, it's all part of a very dynamic economy. Western Sydney economy is one of the big economies of Australia and one of the growth economies. And I think it's it also offers, relative to Sydney prices, an attractive level of affordability. So worth considering. Well,
yes, it is. And because, when we come back to that consideration of, as you call it, that exodus to affordable lifestyles, that is one of them. Because you have access, it ticks every box, right? And if we have our investor head on, it's, again, not cookie cutter. It's not everyone's cup of tea in terms of cash flow, age of property, all those sort of things. So, but you can see I can see the Blue Mountains from here, but you can see the Blue Mountains even closer from there. You have access to, beautiful areas. you've got affordable property, you have got work and job prospects, unlike almost any other to me in the country coming up. You've got good schools, you've got lifestyle facilities, you've got, beautiful rural New South Wales on your doorstep. It ticks every box. You can buy and hold, you can do granny flats, you can develop. There are so many opportunities out there to do great things for yourselves in your investing portfolio. Definitely. Yeah.
That radio interview, Kate, yesterday, I just used the long-term capital growth stats for some of the suburbs in like the Blacktown area, averaging about 8% a year over the last 10 years, compared it to the Northern Beaches, which I think is a damn fine area.
Yes.
And has performed very well. But by comparison, many of those swanky $2 million type suburbs have averaged sort of 6.5%, 7%, whereas the Mount Druitt's and the Doonside type locations were averaging 8%. So it just puts the lie to that myth and misconception that you've got to buy in the so-called prime areas to get the best capital growth. It just simply isn't true.
Yeah, agreed.
Yeah. Now, Steve saying experts were predicting a crash. Notwithstanding historically low interest rates, prices keep escalating. When do you think the party will be over and a crash will come in? Do you have a view on what the correction might be as a percentage of average prices?
Don't see a crash coming. Don't see it.
I don't either, Kate. At some point the growth will stop, as always happens in every cycle. But real estate up cycles are generally not followed by crashes. In volatile markets like mining towns, they are obviously, and we've seen that in some notable examples. But they're not the normal markets that we would recommend that people get into.
Yeah.
Normal market. We saw Sydney and Melbourne have a strong up cycle from, say, 2013 to 2017. There was a correction, but it was a relatively minor one. And then growth resumed coming into the pandemic year. And there's still growth happening in those cities, notwithstanding all the problems. So I don't see a crash, and I don't think you do either, Kate.
No. And look, and I think again, you get all those fundamentals right, and all the growth drivers that are in place. Why would it? It's I just cannot see it happening. What's perhaps driving the thinking that, it's, again, you have to bring it back to the media. It's the only way they've got us clicking on all those stories, right? And they're all on the bandwagon at the moment about, this exodus, everyone's moving to the regions, blah, blah, blah. They are. Look, and I think personally that kind of frenetic activity, that frenzy perhaps, will balance out a little bit, but I don't see it crashing. I think it'll return to what we would see as a new normal. Not everybody wants to live in regional towns. I think once we allow the international travel, migration's back to normal levels, I think it will actually increase. Honestly, I think the world is watching how we have handled this. I think there's going to be queues around the globe to get into this country. And I think some buyers recognize that maybe what they're missing out in the regions, again, it depends on the regions, right? But I think there'll be a more typical level of interest in property. So we are still going through that pent up demand thing. We've all been caged lions released in the savannah, and that's what's happening, So, but I do expect that frenzy to calm down a little bit, but again, I don't see it crashing. Why would it? Yeah.
So Craig is asking Kate, as a buyer's agent, about what percentage of properties you purchase are off-market deals, and do you see a growing number of this kind of deal increasing over the next few months?
The off-market thing. No. The off-market thing it's definitely something that a lot of buyer's agents plug as a marketing strategy. We get millions of off-market properties offered to us before you get a look in. Look, in really good areas where there are good properties for sale, the agent would genuinely not be doing the right thing by their client by offering it to a buyer's agent off-market. They will get thousands of dollars more for that property just by putting it on the open market. So as a percentage, I'd say it's quite low. I couldn't actually put a percentage on it, to be honest. It does happen where we have a particular good relationship with an agent, and I'm, very active in a market. It depends on the seller's circumstances. So sometimes you've got somebody who does need to sell for whatever reason. They don't want to pay the exorbitant marketing fees, blah, blah, blah. And they know that I'm coming to them with a client who is pre-approved, whose finance is ready to go. We're not going to stuff around. Yep, we'll do it. But honestly, in thriving areas, that's going to happen less and less. Why would they? Why would you get off market? It's they will achieve much better results for their sellers if they do that. But it does happen. Like I said, it depends on the agent. It depends on the area. Without wanting to sound vague, it depends on the seller circumstances as well.
Okay, just referring to one of the questions that came in pre-webinar to you. I'm looking to purchase a unit in central Melbourne as an investment, and someone is offering me a good off-the-plan deal. Is this a wise move at the moment?
Insert horrified look. No, please be careful. No, I would just be really cautious about that. We've talked a little bit about inner Sydney and inner Melbourne rental markets. That as an investment, did you say? It does make a difference.
Yes, as an investment.
Yeah. Vacancy rates are still really, really high. And I think in that medium term, they're going to stay high until, as we say, the international travellers, the hospitality workers, you get that demand coming back for those units. There were a lot being built in inner Melbourne. In the last few years, there was already an oversupply of units, and certainly nothing off the plan, because you are going to pay a premium for that. So just, always be mindful, check the resale value of something similar that's just been sold, that might be 1 or 2 years old. Check what those are being sold for versus what you are likely to pay for something like that in an area with very high vacancy rates at the moment. I'd be really careful.
And the vacancy rates are currently
really
for the
high.
CBD of Melbourne 9% still, and Dockland 16% still, according to the latest figures. But also pertinent, I think, are the long-term growth rates. That's always worth looking at. CBD of Melbourne for apartments, just marginally above zero, less than 1% a year, whereas Docklands is actually a minus figure. So
there you go. I would really why. But people are lured in by promises of great cash flow, because you've got thousands of dollars in depreciation. It's premium, it's brand new, people love brand new. They do, but I care about your capital loss a lot more than somebody that you're going to be paying $40,000 in commission to do that. So I would be very cautious. It's a very different animal to a sort of an inner, more boutique-y, if it's a smaller block and maybe an older block in a nicer area. But please be really careful about those big complexes, where you've got 500 units. Your strata fees will kill your cash flow, or, never mind all the thousands of dollars in depreciation that you're going to get in the first few years. But they've got lifts, they've got gyms, they've got pools that will have, I promise you, never-ending slew of problems that you're going to be paying for. Yeah.
So turning to a location that I know you'd be happy to talk about, we've got a couple of questions coming in about Adelaide. Stephen's asking, what do you think about investing in Adelaide, and what areas would you advise to be looking at? And there's a question from Steve about the sort of southern areas, Christie's Beach, Aldinga, Seaford, etc. What are your thoughts about Adelaide, Kate?
Love Adelaide. We always say it's an underrated underdog. I'd say the Marion City Council area at the moment would be my favourite, really. It's, again, when you talk about all those boxes being ticked, that's happening. What I love particularly about this market as well is the lack of large-scale development happening, because there's nowhere for it to go. You're going to have the odd infill, but there's no, acres and hectares and acres and hectares of land where 5,000 new homes are coming. There's nowhere for it to go. It's already, it's hilly, it's done. You can't. So geographically, it's very contained. You have access to, again, incredible job opportunities. It's affordable. The sea is like right there. It's a different sea to the Sunshine Coast, of course, but it's right there. Beautiful, and it's lovely. You've got the McLaren Vale down there. It's gorgeous. It's really, you know, access, again, like Western Sydney, you know, you've got access to more regional and rural Adelaide in terms of your, you know, away for the weekend or things to do at the weekend. So yeah, and that property market, when you look at the growth charts down there, it's just one beautiful steady rise up. And at the moment, the same. It's one of those things that we said right at the start, a rare common phenomenon across the country. Super low interest rates. I'm actually settling on a property for a client down there next week, and we had our first open 2 days ago, and we've had 20 applications for the house, and they haven't even seen it yet. You know, yeah. So the property manager is showing them through, like, by private inspection as a little group. I think tomorrow. That because there's just nothing on the market and the demand is huge.
Well, pretty much every postcode in Adelaide has got a vacancy rate of 1% or lower at the moment.
There you go.
Now, about 12 months ago, I used a legendary buyer's agent to buy personally in Adelaide. It's the suburb in which I bought has increased about 10% in terms of median price in the 12 months. But what's really interesting for me is the rental. At the time, we thought we might get maybe 310 because so much competition for that property. Actually got 350. And now, 12 months later, the lease is up for renew, and the managing agent is suggesting 390 or 400 a week. So,
wow. I mean, that's a $90 increase since you bought it, right?
Yeah. Exactly, as well as capital growth.
Okay.
I've said it often, I'll say it again, I think Adelaide's the most underrated market in capital city Australia. And it's interesting to me that since the pandemic struck in February, we've had 11 completed months, according to the CoreLogic figures. Adelaide's produced price growth in every one of those 11 months except one.
Yeah.
And the annual growth figures around 8% as an average, but individual areas have done much better.
No. And yet people I just don't, again, I don't understand it. You know, move away the obsession with the Gold Coast and move it across, transfer that and go Adelaide. You know, again, not everywhere, but those good, you know, that's phenomenal, Terry. Yeah.
Yeah. And Steve's question was specifically about sort of some of those areas you referred to Marion.
Christie's Beach, just that little bit further south. That's
Hallett Cove is part of Marion. Then you go south to places like Christie's Beach, Aldinga, Seaford.
Yeah. Also really nice. You know, you've got that, you're just that little bit further away from Adelaide. And while I'm certainly no exponent of the get as close to the CBD as you can, it's not the case. But I particularly like Marion because it's in the middle of, you know, people in Adelaide generally, anyone from Adelaide, I'm sure I used to live there, so I'm allowed to say this. They don't like to travel more than 20 minutes. So that's considered quite the commute. So they, you know, when you're placed in Marion, you've got access, you know, that radius, you've got access to things, that all that new stuff that's happening at the Tonsley precinct. But you've also got, you know, access to the hospitals and all that stuff in the Onkaparinga Shire around the Noarlunga Centre, Christie's Beach, and all that stuff. So you kind of hedging your bets a bit there. It's beautiful in terms of like hilly. The lifestyle appeal is big, and you're right by that freeway. You're kind of in the middle of it. It sort of cuts it, Hallett Cove, from the rest of the Marion, cuts through it. So you've got access to those areas from Marion. But I like Christie's Beach too. It has absolutely has potential too. Yeah, well, that area.
Switching focus back to Perth, I know you touched on these areas. Helen's asking how you feel about areas like Wanneroo, Gosnell, Canning. Now, I know you touched on those places. Maybe you can just briefly recap.
Really good.
Those areas that the first-time buyers have been targeting in Perth, aren't they? They're affordable areas.
They are. And Perth, it actually segues quite nicely from what I was just saying about Adelaide, where Perth would be one of those areas where I would get when I say as close to the CBD as you can, I just don't mean don't buy out, you know, too rural. Get in there, get into real Perth metro area, which Wanneroo, Armadale, Gosnell, Stoke, you know, all those places are. Because they have had, you know, they did have that correction after the GFC. It's very affordable. The yields are good, and it is poised. So Wanneroo is just that one further south from Joondalup, which is also really lovely. I like Wanneroo because a little bit like Marion, as I was just saying, you've got access into the CBD. You can also work up in Joondalup and that whole centre there where the uni is, the medical centre, all that stuff. It's lovely up there, actually. You have got a lot of development. You know, Perth is sort of expanding lengthways, a little bit out east as well, but there's a lot of development happening out north of Joondalup and out towards Yanchep. So, and there's talk of extending that train line out that way even further beyond what they already have. So, but I think I would get in as close to the action, the infrastructure and the facilities that are existing as you can in Perth. That's what I would do.
Okay, Avinash, thoughts on how Ballarat is poised from a growth perspective? Has it done its time already? And also Bendigo. Yeah, that's interesting. What do you think, Kate?
It is. And I get asked this question regularly, and it just there seems to be no end to it, you know, because typically those markets do have their time. Geelong is the same. Geelong, Ballarat, Bendigo, those larger Victorian urban centres, which I love, they would kind of pootle along, then have a bit of a growth spurt, you know, after Melbourne, just following Melbourne's lead, and then pootle along a little bit. That hasn't really happened, you know. So since Melbourne had its growth spurt a few years ago, and that phenomenon happened here in Sydney too, of course, where you've got the Central Coast and Wollongong and those outlying areas growing after Sydney does. The same thing happened in Melbourne. So, but as opposed to what tends to happen in Sydney, Ballarat and Bendigo did not really slow down. It's kept going. Yes. Have I got the crystal ball? I think it'll keep going for a little while longer yet, because they have. If you've got somebody who's doing that exodus, you know, who is moving there because they're working from home, they might commute into Melbourne maybe twice a week, they can work from home the rest of the time. You genuinely have you're not missing out in those cities. They're beautiful. You've got amenities in terms of, you know, museums, cafes, restaurants. You've got thriving local economies. You've got, again, they tick every box, but Melbourne is still accessible if you need to get there. And I think that will continue to be attractive for some time to come. I can't tell you that, you know, on the 10th of October, 2023, it'll stop. But
I think Ballarat had I thought Ballarat had reached a peak 12 months ago after 3 years of good growth. But I think the pandemic year, which has exacerbated the trend that's driving people to these places, gave it a second. So we had a second wave, and I think it's got longevity. Bendigo further back in the cycle, I think it's only really just starting its run.
Yeah, and those little towns around there, you know, as well, like places like Dalesford, which is really popular. You know, people love it around there with good reason. But there again, I'd be slightly cautious, certainly in terms of investing. You know, I'd always like, again, to be a bit closer to the action, as I say, where the infrastructure is, the jobs. Yeah.
There was a question before the webinar from Ian that sort of relates to this. He was just basically asking, do we think there's this trend of people moving to the regions is a short-term trend and will revert to what he might call normal?
Yeah, I do. I think it will die down a bit. I think there is. I mean, it has to really. I think it is a trend. a shorter to medium term trend. I think it will die down a bit, or at least balance out. I think, and I said some of this earlier on, because not everybody wants to move and live in a regional town, right? So once we do return to a new normal in terms of immigration, international travel, all those things are back to normal. Some buyers will recognize, like I said, what they might be missing out on. I think some will give it a go, change their minds, come back. Some will stay. And look, and I think unless you've moved out to somewhere really rural, I think it's also wrong to say that people will realize that the facility and infrastructure aren't there, because I think they are. And like we've just said, in those more urbanized regional centers, Ballarat, Bendigo, maybe even Toowoomba, right? I haven't even talked about Toowoomba at all, really. But I think it will be, there will be a more typical level of interest in non-capital city locations. That's kind of how I would put it. And certainly for owner occupiers wanting to live in the cities, some of them are actually, they're seeing real opportunities out there at the moment, because, you know, and so there's always going to be this movement of people for different reasons. But in essence, I think it will calm down, yes.
Yeah, I think it's got longevity, but it's not going to be as busy perhaps as it's been in the last 12 months forever. Craig is asking about Albury-Wodonga, and for me it's one of those places that we were recommending Albury-Wodonga a couple of years ago, and it's certainly performed, but it's one of those places that's got so busy with properties selling so quickly that it's become very hard for people, buyers and buyers agents, to operate effectively there. Are you sort of dabbling in that market at all?
No, haven't actually. No. I have been, or, you know, my clients, we've been focusing on those areas, I guess, a little bit closer to the bigger urban centres so far. But look, the yields are good, you know, and who's there? The ATO are there, aren't they? There's a couple of government offices, people are there. It's definitely a popular area. But
Steve is asking about the Central Coast. Now, I think that's interesting. Also about Newcastle. I mean, our data shows that the Central Coast has had tremendous uplift in sales activity in the last 12 months. And it seems to me like it's an obvious recipient of this trend of people looking, you know, outside of the big cities, but not too far away, perhaps. What do you think?
Depends on the time of day you go. Definitely, absolutely spot on there. When you talk to agents there, it's a real mix of Sydney-siders, but also local people buying. But they are definitely reporting an increase in cashed-up Sydney-siders moving into the area, definitely. So, and the Central Coast Council has been one of those funny little animals who eventually came to the party of progress. But it's been a little bit slow. Having said that, you do have that proximity to Sydney that makes the commute bearable, and there is enough going on there to keep people, you know, to attract people, right? So if it was the Central Coast by itself in the middle of nowhere, I'd say no, because I just don't think there's enough there in terms of economic activity, diversity of industry, etc., etc. But you have got Newcastle, you've got Sydney. Newcastle, love it, absolutely, ticks every box in my book.
Okay.
Yeah.
A question about Yeppoon. This is
over to you.
Sorry.
Yeah, over to you on that one, Yeppoon. Yeah.
Yeah. Well, I mean, it's sort of like it's the seaside suburb of Rockhampton, and we touched on Rockhampton. Look, Rockhampton has come into a period of growth, undoubtedly, from a low base. It's been in the doldrums for 5 or 6 years. It's really coming back quite strongly. Very affordable, good rental yields. It's a little bit volatile. I think you said that earlier. That I mean, it's got more to it than its association with the resources sector, but that is very influential. Yeppoon's the seaside suburb, and it's certainly showing a big uplift in activity and prices. You've just got to, if you're taking a long-term view, and I always say to people, if you're really keen on an area, ask yourself this question: is this the absolute best place that I can buy anywhere in Australia right now? And as a long-term investment. And if the answer isn't emphatically yes, then reconsider and look elsewhere.
Mm.
Yapoon's a growth market at the moment, but I don't think you would answer yes to that question I just posed for Yapoon.
Agreed.
Yeah. We've been going an hour, Kate. We've got
have we?
masses more questions. Maybe we could go a little bit longer, perhaps. Steve was asking the question, areas to invest where the rental will be enough to be positively geared. What sort of places should they look? In relation to that, my question for you, Kate, is what sort of rental yield as a rule of thumb should you be looking for to feel that the rental yield is enough to at least be cash flow neutral and hopefully positive? Is it 5% enough, generally speaking? Or is it...
Yes. So look, I suppose if you're buying somewhere for 500,000 and you're getting 500 a week in rent, that works out at a 5.2% yield. It's 5.2. So, you take your rent amount, really roughly speaking, take your rent amount, multiply it by 52, divide it by your purchase price. Include your purchasing costs if you want to be really specific. It just depends on, how you're purchasing the property. That's very rough. And that's going to give you your yield. So, and if you do that calculation, 500,000, 500 a week in rent, that's a 5.2% yield. So,
so where are you going to go to find those sorts of properties?
Okay. Perhaps surprisingly to some people, the Sunshine Coast. So it is unusual to be in that yield range when you are spending 500,000 and more. It's quite unusual. So, but it also speaks to the demand for rental property in that area, and it also has the good ratio of owners to renters. We generally look at that sort of 70-30 owners renters kind of ratio. You need enough, obviously, demand from renters. You need people to rent your property, but ultimately you want owner occupiers to be clamoring for it to send that price going. So, and if you've got too many renters, that population can be a little bit too transient. They're not staying, they're not buying property, right? So Sunshine Coast has roughly that sort of yield, depending on the property, depending on the area. Many of the Adelaide markets have that very basic yield. Obviously, the cash flow outcome is something quite different, right? We're just talking about a basic yield here.
Yeah.
Many of the Adelaide markets have that yield. Ballarat, Bendigo, many Perth suburbs, the Brisbane suburbs, north and south, Logan, Moreton Bay, a lot of them have a 5.2. You will get close to that, or if not over that 5.2% yield. So those are the areas I'd be looking at.
Okay.
Depending on your profile, how much you have to spend and what you've already got.
Mary is asking us to talk about Toowoomba, and I'm glad she is. You just mentioned the word, but we haven't discussed it in detail. It's one of the places I like at the moment. A little bit further back in the cycle, not quite as the word again, frenetic. And somebody asked, what does frenetic mean? Well, it means just frenzied, beyond busy. It's going crazy. Properties are selling within 24 hours of being listed, etc. And there's multiple offers on individual properties. That's what I call frenetic. Toowoomba's probably not quite there yet, but I think it's going to be because it's got so many credentials to be a growth market.
No, you threw that lovely latest Ryder report at us yesterday that I happened to notice that Toowoomba was one of your feature locations. So I think, tell us, Terry.
Well, look, the two dominant trends for me, the exodus to affordable lifestyle, Toowoomba does tick that box. A lovely city, beautiful lifestyle, affordable. The other one that's coming very strongly is the infrastructure-led economic recovery, where state and federal governments are throwing a lot of money at infrastructure to generate economic activity and jobs. Toowoomba has got that happening in spades. It's got the new airport, it's got the second range crossing, but there's a lot more coming. And the most influential game changer is the Inland Rail Link, $13 billion project, well under construction. It's heading north rapidly to Toowoomba, which is the pivotal point for that project in Queensland.
Yeah.
And it's going to be massive.
Yes. And look, and I think, again, just bringing it back to basics, I believe it is Australia's second largest inland city after Canberra, right? So you've got enough of a population there. You know, you're not talking about Hicksville. You've got a significant urban centre here that has a really good diversity of industry, has all those things going on that you've just said. So I think it's definitely worth considering if you're in the market for that kind of property in that kind of area. Yeah.
Yeah. More questions from people about, you know, how the house in certain areas for the last 5 or 6 years hasn't shown any growth. Should I sell? Should I hold? It's a very general answer, but I think, as I said to an answer to an earlier question, we're now coming into a period of growth, which I think is going to be widespread.
Yes.
And it would be a shame if you held for 5 or 6 years and then you had no growth to sell just on the cusp of a growth period.
That's right. And again, because it's so widespread, and like we've said throughout this session, it's happening across, it's widespread, that it is, and it's hard to see it stopping soon. I think it would be a shame. I think there's definitely an argument for just hold on for a little bit longer, just see what activity is coming, what interest, talk to the agents, see what level of inquiry they're getting, so that you can assess, you know, the level of activity and honestly evaluate the area that you have that property, what is bringing and what is going to be bringing people into that area. Why would there be that, you know, that increase in activity? Yeah.
Okay. Look, Kate,
we've talk about, my God.
I mean, we've gone actually 10 minutes over the hour.
We always do, don't we?
Still probably managed to answer only about half the questions that
Sorry. I hope I didn't ramble on too much. Sorry.
No, I mean, we've answered a lot of people's questions, but I think if we were going to attempt to answer all the questions we have in the chat box and the Q&A panel, we'd go on for another hour, and we can't do that.
At least. I'll just have to do it again.
Well, we will have to do it again. Obviously, there's a liking for this particular format, not so much the slideshow presentation, this is what's happening in markets, but just giving people a forum to ask their questions.
Absolutely.
So, let's do it again soon, but we probably should call a halt. Otherwise, we could just go on all afternoon. I know it's hard to shut you up, and you're probably happy to do it. But people are probably watching and listening in their lunch breaks, and I've got to get back to work. And
that's true.
So do you and I. So
who are you all kidding? We're all sitting here in our pajamas at home. This lunch break business. I'm not falling for that malarkey. Go on.
All right. Okay, so thanks, Kate, for your contribution today. I think we've covered a lot of ground. I think some of the questions we've answered may be location specific, but the general principles behind some of the answers could apply to other parts of Australia.
Yes.
And one of the themes is that you know, it's there's no one right answer to everyone's question. You know, if the question is, what's the best place for me to buy? Well, you know, we need to know more about you before we can answer that question.
We do.
And you really do need to sit down and talk to someone like Kate Hill from Adviseable and talk about your situation and what your objectives are, what you already own and where you're trying to get to before you can get a definitive answer to the question what you should do next.
Yeah, and please, just as a passing shot, please be mindful. There is going to be, when there is this level of activity that is widespread across the country, the spruikers are rife. Please do not fall into the cunning traps, sales techniques that they have. Be really mindful about what you're buying and that it is right for you personally. That's it. Sorry, I have to say it because they always come out of the woodwork when it's like this, and it drives me mad.
Yeah, it's really important to get as much advice as you can from qualified people. And if you're willing to spend $500,000 on a piece of real estate, don't skimp on the small costs, including be willing to spend a little bit of money on advice and a little bit of money on good information, because if you're going to spend the big money without doing that, the process may be fraught with peril.
Yes. Cool. Good.
Okay. All right. And if anybody would like to follow up, we normally throw slides on the screen. Perhaps you could give people some contact details for people who like to follow up, ask further questions, or talk about this situation.
I can actually just very quickly share. Look at this. Hang on. We have the technology. Share. There. Hang on. There we go. Can everyone see that? Hopefully.
Yeah. Yep. Look, I urge people to follow and make contact with Kate and the
right
team
there.
at Adviseable.
Yep. So
Timothy, for example, your question has come on. So you're saying, I'm interested in the Adelaide market. May I arrange a time, Kate, to talk with you? Well, I'm sure Kate will be receptive to that. Follow up with
email.
the contact.
Yeah, absolutely, love. So send an email to info@. Absolutely. There's a team of us, very happy to chat and help. All qualified, all buyers agents, all qualified property investment advisors, all awesome. And go to the YouTube channel as well, Adviseable YouTube channel. Highly recommend that. I do news, I do area reports. Obviously, love doing these with Terry. Do them every day if you'd let me. Send us an email.
So please do follow up. Thanks everyone for your participation. Apologies to those if we didn't get your questions today. There's just too many to handle in the time we have available. But if you'd like to follow up with Kate and get an answer to your question, please do, or you're welcome to contact me at ryder@hotspotting.com.au as well. All right, thank you, Kate.
Pleasure.
Let's do it again soon.
Yes, let's. Lovely to see everyone, and thank you for having me.
Okay, bye for now.